Well, what's going on, everybody? It's your boy C-Zar, and we are talking about MicroStrategy today. Hit that like button, subscribe if you want to see more content like this, and let's get into it, my friends. Shout out to Forrest on the Bitcoin Not Crypto podcast. Forrest talks about MicroStrategy. He talks about a bunch of different things crypto related, but we did a little collaboration today. He's going to make a video, guys. He's going to put that out there. So if you want to check that out, he should put that out over the coming days. I don't know when exactly, but Bitcoin Not Crypto is his podcast, and great guy, great mind, great information on his channel there. Definitely recommend searching him up. But I'm sure some of you have probably already seen his work, right? But we were talking about today, in that actually, I was talking to him about how I kind of do expect the price now to go down and fill this gap. I wasn't expecting that, right? And that's kind of the name of the game with TA sometimes, right? You can have all the reasons and all the expectations to make an upward move, but sometimes you get it wrong, right? I've been wrong before, I'll be wrong again. I've been right before, I'll be right again. It's not about that. It's about mitigating risk at the end of the day. And right now, the way to mitigate your risk in these kind of situations is to not panic, is to not be emotional. It's not a good time to sell. It certainly is not, right? When would have been, if you looked at this, when's the best time to sell? Well, it's not. It's definitely not here, right? It would have been up here or here at the very least, right? Even down here would have been a bad time to sell, but retrospectively it would have been better. Certainly not here. This is not a good time to sell. If anything, right? Imagine you bought the high right here, and you had an opportunity now to buy here, right? This is a great time to buy. It's not a great time to sell, okay? And imagine that the price probably does go lower. I would expect that you do fill this gap. It's very rare. It's increasingly rare that you would get so close to this gap and not fill it, right? It would be very weird if that happens, but sometimes it happens. Sometimes there's so much attention on these gaps that you do behave a little bit differently, but most of the time, I mean, there's a reason why there's a saying in the investing space, right? All gaps get filled. It's very likely to get filled, and a gap fill can be a couple of different things, right? Everybody has their own definition of it. I used to think that a gap fill, you had to close the day where the gap originated from, which that would have been at about $270. You're at $303 now. MicroStrategy absolutely could go all the way down to $270 and still be fine, okay? But that's what I used to think a gap fill was. A lot of people, I think by all definitions, that would fit a gap fill. Some people, myself included, would say a gap fill does not even need to fill the whole gap. You just need to dip into it, right? So any dip basically below 297, you're at 303 now, any dip below 297 would be good enough for a gap fill. If we move down to like 289, and then from there moved up and we started closing days above $325 again, I would say that's the low, gap filled, job done, we're moving up higher. And that's actually a point that I want to move on from, right? Beyond the gap fill, however it is that we fill it. Do we fill it to a T perfectly? Do we go a little bit below it? Do we fill just part of it and then move up from there? Whatever the case may be, whenever we do move higher, we'll know that our low is in, likely when we close above this area here, which is at I said 325, but more appropriately, it'd probably be about 328. If we close above $328 on any given day, that's how we know our low is in right now, right? So even tomorrow, even though I am expecting us to go lower, even if tomorrow we happen to close above 328, right, then I would accept that, okay, this was a fake out. This as convincing as it looks right now that we would move lower, you know, I was wrong, and that was a fake out, and now we're moving back up again, and that's okay. Sometimes you get these little tricky situations, and it's okay to flip-flop, man. It's okay to be bullish here, bearish here, and then bullish again back here, because even if it does this and you're bullish right before it moves down and then you're bearish right before it moves up, as long as you make the right decision at the kind of last moment before it takes off, who cares if you flip-flopped 2 or 3 times down here? You still caught the general low, and then you're going to catch that next move up. I don't suspect that's going to happen, though. I'm prepared to flop back to being bullish if we close above 328, but I am personally expecting we go lower. If we take some fibs, we apply some fibs on here, and we're going to do some other stuff to get some better price targets as well for where I'd expect the lows to come in. But if we take a high to a low here on this fib, we went all the way up to our 2272, holding support on the 1618 now. That would be a nice area to find support on. And again, this if anything, would be the most compelling argument for that kind of fake out. We move up tomorrow and close. If we close above 328 tomorrow, you guys, I will definitely be on the bull train again, right? But likely we'll go lower, and it's okay. Closing below the 1618 is not a bad thing either. We can do that, right? Perhaps what we do instead is this week, maybe we move down to 365, and then we end up closing the week still above 305. That'd be a really bullish look. So look for that. Again, guys, any close On a weekly basis, above 305 is a good thing. Any daily close above 328, that's a good thing, okay? Until then, it's completely possible we could drop down to 265. That is the next fib target. And being that we found resistance at the 2272 area, maybe we go all the way back down to the 1272. Yes, even as low as $240 could be an acceptable target to pull back to. We could go all the way to 240. It's still a higher low. And then from there, we go on and we make higher highs, right? That's fine. It's totally fine. I don't think we go to 240, but that would be about the lowest of my expectations, to be completely fair. I think 265 is a very suitable area, or more likely something between 305 and 265. A good goal on any given day would be to close above 328. A good goal on any given week would be to close above 305. If you can do that, if you can close above 305 after coming down this week, that would very much solidify that as a low, and that we're moving up higher in a very short amount of time. Any given days that close above 328, also solidifying the low. Okay, so I've said that enough times. I think you guys get it. The next target too, wherever we find our low, whenever we move up, the next technical target would be 604 based off this fib. But being that you reached so close to that 2618, to this area here, the 2618 at $604, I would think that you go to the next target, which is the 2886. So the real technical minimum target that I'd feel comfortable giving by the end of January would be 725. That's the minimum target. I still fully expect that MicroStrategy could see targets around $900 to even $1,300 by the end, around $1,000 by the end of January. I very much do believe that that's possible. If not by the end of January, then at least early February, right? And we'll get into that in a second too, but I just wanted to talk about the outcomes, the possibilities, right, that we could see. Likely, the statistical probability of us going lower from here is higher than bouncing from here, but sometimes you do get fake outs. Sometimes that happens, and then if that were to happen, then tomorrow we should have no problem closing above 328, but I doubt that we do. Looking at the daily RSI here, we've rejected the 50 area, twice had a little double top there. With yesterday's closing price, what we did was we bounced off the 40, rejected the 50, and now we've closed below the 40. Very likely we would go to the oversold zone. So I am expecting some daily low closes. We probably do. We probably don't get a partial gap fill. We probably do get a full gap fill, okay? I think I've analyzed the price enough, at least from this perspective. I don't know if I want to do any more. Let's look at some other fibs real quick and see if we can come up with other outcomes that would agree with what we've seen so far. So 287 right there in the heart of that gap. Oftentimes when you interact with your 382, and oftentimes too on a very strong move, you do hold your 382 as support, but also even in those instances, it's very common to go a little bit below your 382. What's a little bit below your 382? 375, 365, right? You could do something like that, close above there. I think it'd be a good goal to also close any given days. If you the less that you close below 287, the better, or the more that you close above it, the better as well, right? So close above that, but that would make sense to me based on a fib level, based off of this here as well. If we look at the overall cycle high to low, and then we'll look at the ribbons real quick, and then we'll look at the open interest stuff. High to low here, 1618 down to the 1272. It could happen, 244, right? That could happen, 244, 265. You don't have to go all the way down there, but that definitely could happen. There's some reasons to believe that as well. If we look at the ribbon here, we're looking at it on a daily aspect. What you did was you found support off it, got some nice support, but then you continue to find support, giving you the reason to bleed into it. Most of the time, whenever you get this kind of look, you often always find your low below the ribbon, which we are now officially below the ribbon. So at any moment now, we could find our low. I just think that it will be lower. I don't expect this ribbon to cross bearishly, but it can get tighter and tighter as we go. We might get to a point where it looks like it's about to cross, and right then and there, that might be when we just explode back upwards into the ribbon above the yellow line. Whenever we do get above the yellow line, this is another area to watch. That's reason to get excited as well, especially whenever you're in a bullish trend like this. You bleed into it, you're below the ribbon. Anytime you're below the ribbon in a bullish trend, that's normally the low itself, and it's a really ideal time to buy. You'll know that you're going to see higher highs than this when you get a price to close above the yellow line, which is at about 355 now. So reasons to get excited to close above 328, even more reasons I would say to get excited to close above 355. But as time goes on, and I think we will have more days to come to the downside, this yellow line will go lower. Wouldn't it be funny if by the time that yellow line was at like 328, right where it looks like it's about to cross bearishly, right when it's at 328, that's whenever we move up, we close above it, both closing above the ribbon and 328 on a resistance to support basis, indicating that's the low and we're ready to move up. I don't know. I think that'd be kind of funny. 3-day time frame, also could suggest that we go down a little bit. The weekly looks phenomenal, right? But with the weekly, sometimes what you do is you just tip it, right? You bounce right off of it and you tip it, kind of like this here, right? So that price would be down at about 265. That number keeps coming up. Something between 280 and 260, or sorry, 240 and 280 keeps coming up. Monthly ribbon, phenomenal. Everything looks good. Let's look at the open interest. Yeah, MSTR. Let's look at the calls and puts. MSTR, open interest. What do they call it? It's the ratio. I forget what it is. It's open interest. OI P and C ratio. I forget what it's called, but it's like the puts to calls ratio. More reason to believe that we probably moved down going into the end of this week, right? We have a lot more calls. I remember last time I talked about this, it was last week sometime. The calls to put ratio was pretty even. There was a little bit more calls, but it wasn't quite at a 0.6 like it is now. There's a lot more calls, 219, almost 220,000 calls that are open right now, where the puts are at like 131,000, okay, that expire by the end of this week on the 3rd. So at this moment, I would want to see these calls coming down. I'd want to see these puts coming up before that's even suggestive of a low being in. And then going out here to January 17th, where we have a very large amount of puts open. We also have a very large amount of calls. There's a lot of open interest around the state specifically. But last week, if you guys remember, that put to call ratio was around 1.7, I believe. It was at 1.7 or 1.77, something like that. Now it's at 1.51. Earlier today, when I was talking to Forrest on Bitcoin Not Crypto, when I was talking to him, it was at 1.49, so it did come up a little bit, which means that ratio going up, it says 1.51. You can see what I'm talking about. I can't move my mouse to it, but you can see it, right? If I tried to, it just goes away. It's like those squiggly lines in your eyes. It's at 1.51, so it went up a little bit, which means at the end of the stock day today, there was more interest in puts, more interest in shorting it than there was longing it, and that makes sense because we had a bearish close for today. It makes sense, right? We had a let's just say kind of an unexpected outcome today, which really retrospectively probably should have been an expected outcome because the open interest is more to that of the long side than it is of the short side for this week. But after this week, what this information is telling us is that going into next week, there's more puts open than there are calls. Going into the week after, there's more puts open than there are calls. Going into the rest of the month, there's more puts open than there are calls. And as bearish as things might seem right now, by the end of this week, I would assume they're only more bearish. There will probably be, ideally, more puts being added to the January 17th expiry, more puts being added to the January 10th. You'll probably even see some puts being added to the end of the month. You know what I mean? But a lot of people like to go a month out, so if it's January 3rd, maybe you'll see it like February 7th. There's nothing open for that. Maybe February 21st, I don't know. But you'll see puts being added to. So hopefully by the end of this week, we see the put to call ratio increase a little bit on all of these future expiry dates, and hopefully it's not the other way around. Because if the calls start gaining dominance and the puts start becoming the minority expectation here, that could really spell some trouble, not just for MicroStrategy, but probably for crypto going through the rest of January. So a little bit of, let's say, I wouldn't call this fundamental analysis. It's like technical analysis on the fundamentals of technicals. I don't know. Options analysis. And we said hi to Forrest. Sorry, I didn't mean to put your face on there again, man. That might not be the best freeze frame, but we got you, man. Hit the like button, you guys. Subscribe if you want to see more content like this. You're at $303 right now. Probably going to make a move down. I would guess anywhere from 240 to 280. Likely, I think that 265 to 280 area is probably where you would go, unless this is a fake out, unless this is some kind of psyop move right here, and tomorrow we just close above 328. If we close above 328, you're gonna hear a different. It's gonna be a celebration, right? We're gonna get a lot different of a video going tomorrow. In January might be even more bullish than we're expecting, but absolutely the targets are still the same. I haven't changed my targets. If anything, I would say I'm more open about talking about the lower targets than just talking about 900, because the very real next target based off this fib would be 994. Okay. But by the end of January, maybe it's not by the end of January. Maybe it's by the beginning of February. But I do suspect that it could be by the end of January. If not, 996 is an inevitable target we will achieve. Okay, but the other targets I think that are worth mentioning would be, the 3113, the 3618, that's between about $600 to $800. That one, we don't have our low here, so it's not really appropriate to draw the fibs, but I would assume that something, if we drew a high to a low here, something around like, it'd probably be like 700 to 800. So it's very possible that by the end of January, instead of being at $1,000, MicroStrategy could be at anything from $600 to $800 instead. But still, going from a price of $302 up more than 100% likely by the end of January, in less than a month's time, probably by the inauguration of Trump himself. And not only that, but you have the opportunity to probably buy this thing a whole nother like $40 below it is, below the current price now, at least $20, at least around 10% or more down from its current price. There's a lot of opportunity to be had in the month of January and probably going forward after that as well. I got nothing else I want to talk about. Hit that like button, subscribe if you want to see more content like this, and I will see you guys on the next one. You know, there's one more thing. I do that. There's one more thing I do want to talk about. Okay, just real quick in reference to Bitcoin and MicroStrategy. Here was the end of MicroStrategy's cycle last time. Okay, it's debatable that it could have started here in March, or maybe it started here in August. But what's not debatable is out of this whole time frame from that low to high, there was only 2 months that were red. Only 2. Okay, the rest of them were green. Here we are right now, and this I'm not saying this kind of was the whole bull cycle for MicroStrategy, but really this was like the end of the bull cycle for it, right? This bull cycle has lasted a lot longer than the last bull cycle already, right? We've gone 23 bars, where this one was about 11 bars. Okay, so a lot longer so far. But I suspect after breaking out of this consolidation phase, we're in that last part of the bull market, okay? Just like last time, the last part of the bull market was green month after green month after green month, okay? I suspect this month of December, right, which it's going to close tomorrow, it will probably close red unless we move up 22% tomorrow, which I doubt we do. It'll probably close red, likely for the remainder of the year that MicroStrategy has, and maybe it doesn't have a bull market for the whole year, but maybe it has 6 months of bull market left. Maybe it has 8 months of bull market left. Maybe something in between there, or a little bit in more or less than that, right? However long its bull market is, likely next month, January, will not be a red month. Likely the next month, February, will not be a red month. Likely we would at least get 2 more green months after having this red month, because again, it's characteristic of the end of the cycle to be very green. And I want to apply this to Bitcoin because MicroStrategy is essentially like the world's largest Bitcoin bank, right? That's what people like to say. So I think comparing Bitcoin's price action at the end of a bull rally might be comprehensive in guessing or assuming what MicroStrategy's behavior could be for the end of the bull rally as well, right? Because MicroStrategy, this is really only its second rally having this established kind of Bitcoin bank identity, right? The first time it was kind of a wimpy rally. We had a wimpy rally with Bitcoin as well, but this time it's obviously more robust. It's different. And I mean, you can just hear it in the headlines. Everybody, I said this before, everybody wants Michael Saylor at the seat of their news desk. They want to talk to him, man. But Bitcoin here, we look at the monthly basis here. Okay. I've done this a few times, but it's just a very simple kind of metric to do, right? What I just did with MicroStrategy there. On a monthly basis, you can see from the very first cycle, we go back a whole year. Come on, man. There we go. A whole year. From the high, 12 months before, we had 1, 2, 3 red months. And actually, this one here, it says plus 3%. This is actually a plus 3% red month. So actually, we only had 2 red months, one of which was actually pretty damn neutral, but 2 red months in the last 12 months. The last 12 months of your bull cycle, 3, and really actually technically 2 out of 10 were red. 2 out of 12 were red, okay? The next bull cycle that we had, from the end of the bull cycle to 12 months before, we had, again, 2 red months only. And they were back to back, but that's not common. Most of the time, right, these green months are the ones that are back to back. The red months are spread out through the final phase, right? I'm just measuring that last year of the bull cycle, the final phase, okay? 12 months, look at how much we're green, look at how much we're red. Do the same thing over here, okay? 12 months back. We go to 12 months, it would have been right here. We have 1, 2, 3 red months, of which, you know, you had a green month here and then a red month afterwards, but then you had 1, 2, 3, 4, 5 green months and then a red month, 1, 2, 3 green months. It's more common to have green months in succession of each other in this last phase of the bull market. End of the bull market here, not at the all-time high, but the end of the cycle, which I think is actually appropriately drawn right there. 12 months before, you had 1, 2 red months. Again, In between these two red months, you had two green months. So it's more likely that you don't get that succession of red months in a row. It's more likely to get a succession of green months in a row. I don't know when the cycle is going to be for Bitcoin, when it's going to be over. Let's say that this month here was the beginning. Let's say this low was the beginning of the last 12 months of Bitcoin's bull market, okay? If it was, that means we've had 2 red months already. Historically speaking, Bitcoin only gets 2 to 3 red months in its last year of a bull cycle. And if August was the month, okay, that is 12 months away from the end of the Bitcoin bull cycle, we've already had 2 red months. If March or May was the beginning of this 12-month period, we've already had 4 red months, which is above average, which would imply then that between now and May, if the end of the cycle was May, that we're going to have 4 years, over a quarter year of just green side to the upside, right? So even at the worst scenario where the cycle ends in May, likely it would actually be a good thing for the remainder of the cycle. If we've only started this and this is our first red month, then even then still likely we would have a green month in January and likely a green month in February and maybe even a green month in March. But it's not likely that we would have a green month succeeding or a red month succeeding a red month, right? We would not have succession of a red month after a red month previously. So I don't know if any of that made sense, that last part. It's a little bit simple. I feel like it's a very simple form of analysis, but a lot of talking, a lot of me saying 3 red months, 1 red month, green months in a row, succession of red months, a lot of like just boring kind of terms. So I hope I didn't bore anybody out. I actually think this is kind of like I said, a basic yet interesting form of analysis. Really all it is just simply showing that the end of the cycle is the most robust. We don't get multiple red months in a row. And if we do, that's it, right? Everything else is green other than those 2 red months in a row. So it's going to be robust. December was a dud. It absolutely was. It's not the expectation for December to perform the way it has, especially during an election year, especially during a bull market. We've never seen it happen before. So I would suspect that we've got some catching up to do in January. And this was kind of all inspired with what I ended off with before this, which is that I think that 600 to 800 is a good minimum target area, but I still fully am holding to $1,000 by the end of January for MicroStrategy. And that's all I got to say. So if you like the video, hit the like button, subscribe if you want to see more content like this. A little bit of downside first, then we got some upside probably starting next week, my friends. Take care. Bye-bye.